Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. If we look at this chart of the S&P 500 throughout 2022 and we compare it to the amount of flows that we've seen on TLT throughout the year, you can see that every time retail investors pile into TLT, which is the Treasury Bond ETF, we've basically saw that at each S&P 500 top, whether that is the top in January of 2022, in March of 2022, and of course right before the August top in 2022. So we have that same dynamic again where investors are piling into the ETF, into Treasury bonds. Now, if instead of the S&P 500 we put the chart of TLT, so we select TLT here, well, you can see that each of these spikes in the TLT fund flows have corresponded with tops in the bond market right before big moves down in the bond market. Again, that happened in January, March right here, right before this drop, August right before this drop, and it is happening again. Now, the reason why this could be worrying, and this is exactly what we're going to take a look at in this video, is that this has timed the bottom of bond yields every time throughout 2022. Because as bond prices are falling, bond yields are rising, and that is what puts pressure on the stock market. That has put pressure on the stock market throughout the entire year. And I can show you that very quickly by just adding bond yields on top of the S&P 500. Every bottom in bond yields have coincided with a top in the stock market. Bottom in bond yields, top in the stock market. Bottom in bond yields, top in the stock market. So if TLT fund flows right now are telling us that bonds are about to crash, that would just be basically a repeat of exactly what happened in August, in March, and in January of 2022. So pay attention very carefully because we are going to be answering that question in this video. If you are new here, don't forget to smash that subscribe button if you want to enjoy more content like this, learn about the stock market, and understand where the opportunities are. We post these types of videos multiple times a week. And of course, if you enjoy this video, don't forget to leave us a like. Now, without further ado, let's get right into it. So let's go back to this chart here of TLT fund flows, and it does seem like throughout 2022, this is a very worrying chart. Every time we've seen retail investors pile into TLT, it's been before TLT has actually dropped. The market has dropped as yields have been rising. But if we go back a little bit further in history, well, the picture is already a lot more mixed. You can see some of these spikes like 2018, again towards the end of 2019, a lot of these spikes in fund flows were actually pretty good buying opportunities for TLT. So yes, throughout 2022, it's been a horrible trade, right? And every time investors have come into the ETF, it's been right before a big tank. And this has been a great sell signal for the market. But throughout history, that has not always been the case, right? Again, in 2016, you had a spike around here. That was definitely not at a major top in TLT. Then you've got this spike in 2015. That was actually more of a bottom. This one in 2014, again here in 2014. And then you had multiple spikes in 2014 right here that were, again, pretty good buying opportunities for TLT. So yes, throughout 2022, it's been a great timing signal to get out of bonds and get out of the market. But it doesn't seem like that has always been a guarantee, and that means it's not going to be a guarantee looking forward. However, I am going to show you in the rest of this video that what's happening here on this indicator can actually give us a lot of insight regarding what is going to happen next on the stock market. And for that, we're going to smoothen out this reading of TLT fund flows. And instead of using a 20 period moving average of the flows, we're going to use a 150 period moving average to understand how much people have been piling in on this trade throughout 2022. And you can see here, it's absolutely massive. The amount of flows that we've seen going into TLT is just astounding. Now, if you know a little bit about why people buy TLT, why people buy Treasury bonds, it's a risk-free investment, right? These give you protection against your portfolio. You can see, for example, if we zoom out here, you can see how bonds performed in 2008. Treasury bonds were one of the only assets that rose throughout this period. So people buy bonds to protect themselves against the financial crisis, protect themselves against volatility in the portfolio. And of course, throughout 2022, especially in the second half of 2022, 2022 here, we've seen a record amount of people buying TLT for protection, to protect themselves against a crisis. And that makes sense, right? There's a lot of uncertainty out there. You can see, for example, the yield curve that has recently completely inverted for the first time since COVID. Before that, 2008, before that, 2001. So these all marked major recessions and huge periods of volatility in the market. And so what I'm going to do here is, instead of TLT, I'm going to show you what this chart looks like. And this is absolutely crazy. You can see if I put the S&P 500 on top of this chart, you'll quickly see what I'm saying here. These thrusts in TLT have systematically occurred after periods of volatility. You can see, for example, 2015 here, a 2-year period where you had wild swings in the market, 15% drops, 15% rise, 15% drop. Look at what investors were doing throughout this period. They were buying up bonds to protect themselves against market volatility. They were basically capitulating out of the market. And again, right here in 2017, big spike right there. Even though the market was bullish right here, there was a lot of pessimism, right? The market had been going up for quite some time, and people thought this was the moment for the market to correct and to retrace part of those gains. So you had a lot of people buy protection against that. And again in 2019, you can see here, as the market rallied after that big drop here in 2018, markets rallied, and look at what investors were doing. They were buying up bonds. In all of these periods, you can see stocks moved higher. After that, 2016 higher, 2019 higher. We've seen this in an extreme way in 2022, a huge number of people bracing for impact. Think about the amount of fear we have in the market right now, yield curve inversions, everybody's talking about earnings contracting, a recession, mass layoffs that are coming, unemployment that's about to skyrocket. That could all very well come. A recession always ends up coming at one point or another. The question is that going to happen now? And are investors, are retail investors right about hedging themselves in this market environment? Or is the Max Pain scenario right now that we actually see a dump in these flows before the real crisis unveils itself? And you can see that's actually exactly what happened. First of all, right before 2015, you can see huge amount of fund flows here in 2015, and then you can see right here, big capitulation out of treasury bonds. People thought they didn't need their hedge, and look at what happened in 2015, big period of volatility. And if we go back to the 2008 financial crisis, you can see very similar. We had a bump right here in 2007 after the yield curve inversion. People were very concerned about the outlook, and then look at this at the beginning of 2008, almost for 6 months straight here, people were coming out of TLT right before one of the biggest financial crises in history. I have to admit, when I saw this chart initially, this told me everybody is in the Fed pivot trade. Everybody is piling into bonds, expecting that yields are going to be coming down, that the Fed is going to pivot, that the economy is going to weaken, and that means that stocks are going to rally. And we've seen this story over and over again throughout 2022. So the initial reaction I had to this was that we had to take the opposite side of that bet. But looking at history, looking at the broader picture, it doesn't seem like that's the case. And in fact, the big conclusion that I made from this video is actually more directly related to the stock market, and that these massive inflows into TLT is actually just retail investors capitulating out of the market because of the volatility, seeking protection at a moment where they should be increasing how aggressive they are on the stock market and not looking for risk-free investments. Now, of course, it is very unfortunate that we only have data going back to 2005. This captures only a very specific market environment where we've had pretty much no inflation, right? So the fact that we have 9% inflation in today's market could mean that these dynamics completely change. But as we saw with the most recent CPI reading, inflation is coming down, and it's coming down fast. This is something at least we've been talking about a lot. The fact that the yield curve is so inverted does mean that the Fed has less and less room to get tight and to hike rates. They are already at the point where they are creating a recession. We know there is going to be a recession right now. We know there's going to be a significant economic slowdown as a result of this yield curve inversion. If they continue hiking aggressively, they know that they're risking a very big policy mistake where they could even trigger a depression a major financial crisis, a collapse of the system as we know it. If you want to find out how we're navigating through this market environment, we post short, quick reports on all the key trades that we're looking at right now across the financial markets that are all represented in an ideal allocation strategy through a model portfolio. We also post videos walking you through these trades, looking at the entries, the exits, the driving factors. So if that's something you'd be interested in, make sure to go ahead and click on the link down below. Now that's about all I wanted to cover in this episode. I hope you guys enjoyed. If you did, don't forget to smash that like button and click on that subscribe button if you haven't already. Now in the meantime, I wish you good luck on your trading and see you next time.